everyone, welcome to the Ichimoku daily analysis of the Euro US dollar FX for Thursday, September 26th, 2013. Well, a continuation of the trend to the downside for today. Previous day's trading, we had a fairly large white body candle, but that candle failed to change the trend. It was an outside day in bar chart terms. The prior trend to that was down, so technically that trend remained down. Now, even though we saw the buyers close with control of that market for the previous day's trading, it did raise some doubt about whether the trend could change to the upside. We wanted to see confirmation of that, and the market has failed to confirm a change of trend today, so the prior trend, which was down, remains in force. Now, in bar chart terms, this is an inside day, this type of candle, and it does raise some doubt about the market's potential to trade to the upside or the downside, so a lot of indecision in the market because of this type of candle. But we do have a moderately large black body candle, and almost as large as the body of the previous day's trading, and that suggests that the sellers have found some downside momentum once again in net terms, as opposed to the buyers who found a substantial amount in relative terms for the previous day's trading. The market has managed to close down below the midpoint level, and not quite down towards the low, but below the low and the midpoint level, and that suggests that the sellers have taken back control of the market. Whereas the buyers had control for the previous day's trading, the sellers have taken control once again, and that suggests that there is a possibility of this trend continuing down. Interestingly, however, the area at 134.85 is held as support for this market, and where we were trading up above there, the market has traded down below there and been rejected from there and closed just above there, so suggesting that that area may be a very important area of support for the market for tomorrow's trading, as it is currently developing now. 134.85, if it's breached in a bearish manner, may see the market trading down to the area at 134.52, which is this minor swing high, and then we have the Tenkan-sen trading just below there, so we have potentially very strong support just below where the market is trading if the trend does continue to the downside. Even below there, the 134 level has been a very important level in the past, so we do have substantial support below there. But if the trend does change, and we're not seeing that in the short-term dynamics now, but there is very solid resistance at the 135.49 area, and just above there, just below there around the 135.20, where we saw the market testing roughly to and being rejected from. So we are seeing a market that's forming some sort of a congestion. It's some sort of a flag-type pattern. And here we see that flag type pattern. It's not a perfect type pattern. Some of these lows don't correspond with the lower boundary, but certainly the upper boundary has been fairly well defined. And here we have the flagpole, this very strong uptrend that we've seen the market in. Congestion now, the flag moving against the prior trend, and they tend to be continuation patterns, so we will be looking for a breakout to the upside and a close above the upper boundary to confirm the pattern. Now, these patterns can also be reversal patterns. It's more likely that they are continuation patterns, but with it the potential for it to be a reversal pattern, we'd like to see confirmation of the close down below the lower boundary to confirm that pattern. But here we certainly are seeing some sort of a pattern, some sort of congestion forming at the moment. Now, in terms of the Fibonacci extension, and here we've seen the market trade to the 161.8% level for the prior two trading days and be rejected from there, so that does suggest possibility of a change of trend. We haven't seen that change of trend. We were looking for confirmation. So now the 161.8% is still in play. The market is almost tested to there for today's trading. So for tomorrow's trading, it will be a very important level, and I suggested if the market does break out down below there in a bearish manner, the next level we should be looking to is the 261.8% at 134.07. And in terms of the Fibonacci Retracement, and here we've seen the market test exactly to the 38.2% level with some rejection. It is an important level. There is potential for a change of trend based on this indecisiveness in the market and that higher time frame flag pattern that's developed. So we will be looking for the market to potentially trade to the upside. But if the market does trade down through this 38.2% level, the next level is the 50% level at 134.46, and that coincides with the area that the Tenkan-sen is trading in, and that should offer itself as very, very strong support for this market if it does come off. Now in terms of Ichimoku, a bullish market in all three time frames. The market's trading above the cloud, so we have a bullish market in a long-term time frame. It's trading above the Kijun-sen, the pink line here, and so we have a bullish market in the medium-term time frame, and that Kijun-sen is pointing flat, and price action has been attracted back towards the flat Kijun-sen, so there is still potential for the market to come off whilst the Kijun-sen is pointing flat, and the market is still trading above the Tenkan-sen, the green line, and that reflects the market being bullish in the fast-term time frame. Looking across here at the Chikou span, that's above the corresponding price action, so it's confirming that the market has bullish momentum in that longer-term time frame. It's suggesting that the trends in all three time frames are quite strong and quite valid, and that the market may, if we see it come off, find support at a lower level and then bounce off. It also supports the idea that the market is relaxing and congesting in a flag type pattern, and that that flag pattern may eventually turn into being a continuation pattern. So we will be looking for a potential close up above the upper boundary of that pattern. But really what we need to do is look for confirmation of any of these signals. We do have very solid resistance overhead where the market's trading at 135.49, but then very solid support here at 134.85, extending down to 134.52 and to the Tenkan-sen.